It's my pleasure to welcome Leslie Appleton-Young. I have been following her work for a long, long time. I'm talking decades. She is the Chief Economist with the California Association of Realtors and a Senior Vice President with them as well. And I have been to so many of her speeches over the years when I lived in California. And she just does some great work talking about the housing market, the economy. And I know I mentioned the chief economist for the California Association of Realtors. But as I've mentioned before, California is the largest state in the country. It is probably the sixth largest economy in the entire world if it were a country. So it's a big deal. And as goes California, so goes the rest of the nation. Sometimes, not always, but
not always.
It's not always. Yeah, and we'll talk about that. But that used to be the saying, at least. And so it's my pleasure to welcome Leslie Appleton-Young. Welcome. How are you?
Jason, I'm great. Really great to see you. Thanks for asking me.
It's good to have you. I've wanted to have you on the show for a long time, so really a pleasure to have you here. And maybe we'll start off. I usually ask people where they're located, and you have now moved to Sarasota, Florida. Is that correct?
Right. I'm living in Sarasota. I flew from Los Angeles on March 12th and got here just in time. I was actually planning to be bi-coastal this year because I'm retiring from CAR at the end of this year. But with COVID, it just made a lot of sense to just do it. And everyone in the company at the association is remote. So we are just all Zoom all the time. And we haven't missed a beat, really.
Yeah. I'm curious, when it wasn't remote, where was your office? Was it in Los Angeles?
Yeah, absolutely. We were in downtown LA. We were in downtown LA, and then our lobbying office is in Sacramento. Good
stuff. Good stuff. So, Leslie, we are definitely living in interesting times. And, counterintuitively, so many people in February, March were predicting the end of the world. There's going to be a giant crash. That may still come, I guess. We'll talk about that. But the Fed and the government have come to the rescue, as I think is the new way it's just going to always go. That's what everybody expects now.
Well, we learned to fight the last war, right?
Right. You meaning the Great Recession, right?
Absolutely.
Yeah, with stimulus. So
it was a lot faster and a lot bigger this time around.
No question about it. I mean, GDP down 30-ish% or so. This is truly a remarkable time, and it's a pretty crazy and scary time too. But in the midst of that, there are definitely a lot of opportunities. I predicted very early that there would be this mass migration to suburban markets back in early February, if you can believe that. I think I might have been the first person to make that prediction. And it's certainly happening now. People are leaving high-density urban areas. And that trend was already underway because most of those areas are business unfriendly. And, so there was a migration, but I think COVID accelerated it. Give us your take on things. I know you've got some great slides, charts, and graphs to share. For those of you listening via audio only and not seeing the visual, of course, it will be available on the YouTube channel, but we'll try and elaborate on the visuals so that you can relate to them even though you're not seeing them. Leslie, what do you think?
Okay, well, why don't I just start with sharing my screen? I mean, it's a very a big question that you're asking. And I guess I'll just say there's a tremendous amount of uncertainty out there. And the housing market has been incredibly strong given the constraints of very limited inventory and new construction, right? So we've seen a very hot market. Certainly once the initial first round of the lockdown was lifted. So that's really been the story. And looking forward, we can talk about a couple scenarios, and I'm sure we will. But let me start with sharing my screen.
You always have such fantastic charts and graphs. So
I have a great team behind me with Jordan Levine and Oscar Way and Samantha Olays in Georgia. I mean, they are just so I look good because they are the ultimate kind of professional, incredible people. So listen, one of the things that we've started to do, like everybody, is pivot towards more high frequency data. And we're doing weekly reads of the MLS, actually daily reads, and calculating weekly averages of key metrics. And we're also serving our members every week. And I use this slide when I start speaking just to make a point about giving each other some grace about this pandemic. There is no consensus view on what it is and how it ought to be handled. And I think our membership and the realtors are no different than anyone else. So way back in April and May, we asked, is it too long? Are we taking too long to loosen up? Not long enough, or we don't know. And it's about a third. And then I also start out with just the summary of where the major forecasting financial, academic, and governmental entities are with respect to what 2020 is going to look like, to make a point of nobody's got the same numbers, but everybody's got the big drop in the second quarter, which you just noted was at an annualized rate, a drop of over 30% on a quarter.
Right. So just to elaborate on this slide a little bit, Q2 being the second quarter being the really bad one,
right?
And the predictions go from the worst being UCLA predicting a 42% reduction in GDP for the U.S. economy in
at an annualized rate, right? So that's important to say, right?
Yeah. And Bank of America maybe being the most optimistic, JP Morgan Chase being the most optimistic at a 25% decline. So it's kind of all over the board. Goldman Sachs has been a really, a lot of people have quoted that one. They're saying 39%. So this is pretty incredible. I mean, these numbers are staggering.
Yeah, and they all have the same trajectory though, right? They all have the Q2 being the big hit and then a gradual recovery after that, with the decline for the year as a whole between 5 and 11%. So there is a lot of leeway, but there's a general story that at the time, and this is as of the end of June, all of these forecasts was the assumption that there wouldn't be a second wave and there wouldn't be a second lockdown. And that is not clear at this point, right? As states like Texas are backing back down, and the whole confusion over schools and all that. So it could be worse, and hopefully it will be better. But I just again want to make that point that forecasting is always dangerous, but it's particularly fraught right now. Yeah. One of the things, as I mentioned, we're doing weekly surveys, we're doing polling. This is a monthly poll that we started in the fall of 2018. Just a Google poll once a month, California consumers. Is it a good time to buy? Is it a good time to sell? And the buy side is really strong. It's currently above what the norm was until the pandemic. And to that, I think you can attribute a couple of things, but certainly record low rates, right? With the 30-year fixed rate conventional mortgage under 3% is an incredible stimulus, coupled with the coronavirus fear, and as you mentioned earlier, a flight to the suburbs and a desire for homes with more space around them. And then the work from home, work from anywhere world where you don't have to live within a horrible commuting distance from where you work anywhere for some jobs, right? For white collar jobs. So I would say the buy side is definitely out of the COVID coma. I mean, the buyers are ready to go. I describe it as, let's pretend it's January again, where the buyers are ready to go. Right. And on the sell side, you've had not only more hesitancy, but you had a huge drop between March and April in the perception of the desirability of selling. And I think that was, I don't want people that might be sick in my home. Right. I've heard prices are going to soften. I don't think this is a good time for me to go put my home on the market. But you can see over the last couple of months that started to heal and come back, I think, and reflective of that hot market that I described in the introduction.
So Leslie, let's parse this, and I don't know if you have data on this, so if you don't, just you say you don't, but can we parse this up at all? I mean, when people talk about the housing market, it drives me crazy. I'm sure it does you too, because it's more than one market, obviously, right? So it's geographically, it's by price segment, housing style, but price segment might be a good one to really look at. The market is booming. These interest rates are so low. It's just, it's literally negative interest rates. Are all segments of the market doing this? What about the extreme high end, the middle market, the low end? Certainly necessity housing is booming. We all know that. But, can you drill down on this at all for us?
Yeah, I think it's really important to talk not just about the demand side, but the supply side. And the low end has been constrained because there's literally almost no inventory, right? Yeah. I mean, if you look in California, under 400, under 300,000, there's just very little there. And the upper end's been interesting because the last 2 months of data have shown a resurgence of activity at what I'll call the high end in California, maybe the ultra high end in other parts of the country, but in the over 2 million. And it's one of the reasons why in the June data, which is unfortunately the last monthly data that I had, we had an all-time high in our median home price of $625,000, highest annual median home price in California. And again, it was two parts. It was more homes sold at the upper end, and it was price appreciation in every single category. So I would never disagree with what your point about real estate being local, but I will tell you that my experience over the 30 plus years I've been doing this is that there are common themes that tell a story, right? That it's hard to evade. And certainly one of the really interesting things that we're seeing in California is just really hot activity in the Central Valley. The people from Los Angeles looking at homes in Bakersfield, right? And it used to be just an affordable housing driven migration story. And now it's also a quality of life COVID generation story.
A social distancing story.
Too. Right. Yeah.
Good stuff. Okay, let's move on.
Okay, let's move on. So just at a glance, here's what we saw in June, and I won't go in any detail, but we're running year to date in California down about 12% from 2009.
And meaning down
sales
volume.
Sales year to date.
Volume.
Yeah. Right. Sales. No, number of transactions.
Right.
Number
sales
of transactions.
Volume.
Yeah, sales volume. Okay.
Right. So the important thing, I just want you to make sure, and you alluded to it a moment ago, it's inventory. So, what people commonly, I think, are misled by some of these stats because they think, oh, well, sales volume is down. That must be the market is bad. But the especially in the housing world, when you don't have inventory, you can't have any sales, okay? So it's not that people don't want to buy. Sales volume being down might be a sign that, it's a seller's market and everybody wants to buy, but there's just nothing to buy.
Absolutely. It's not even a nuance. That's a huge point, right? Yeah. Okay. You've got to look at both sides. So we have 2.7 months of inventory in June.
Okay. And what would be considered like a normal month supply of inventory for you?
Okay. Up until 2013, looking back a couple decades, I would have told you 6 to 7 months supply is normal.
Is like an even keel market.
Right. Since 2013, I will tell you it's 3 to 4 months of supply. In fact, in other words, we had in California, and this is a national phenomenon, not just California, we have been at unusually low levels of inventory. Yeah. So 2.7 months is a very rapid market.
Sure.
So I think that's really all. And then look in June how low rates were, and they were headed even lower. And then we also look at price per square foot as just I'm very agnostic when it comes to data. I just want to understand the methodology. So people talk about median price, they talk about average price, they talk about price per square foot. And typically things track, right? Typically you don't see a different measure and go, oh my God, the story is totally different. It's typically not. And we're seeing that with the price per square foot data as well. So this is a history lesson in 15 years of looking at sales in California. And what's a little bit sad is to look at the first 2 months of 2020 and just the anticipation that this was going to be just a banner breakout year in real estate, because we were above sales from 2019 and really looking forward to a great year. I also want you to see the V-shaped recovery during the Great Recession. Mm-hmm. And then eyeballing this starting in 2011, we have essentially had a flat trend in home sales at a time when we have had job growth, income growth, household formation growth, and very low rates. So this market has been held 20 to 25% below what you would expect inventory, sales volume to be, because of two reasons, inventory and affordability, right? And so there's just a lot we can talk about those two things, but I just want, everybody to understand that we have not had a breakout market over the last 8 or 9 years because of those two constraints.
Right. So what Leslie's showing here, if you're not seeing the video, is a graph showing sales volume, right? And you can see that the volume went down precipitously from 2005, bottoming out in late 2007, I guess, and then it started going up. And so that's the V-shaped recovery, until 2009, and then it sort of stays relatively flat along the way until, maybe this is, I'm going to guess that is about February where it really, or
April
March,
is when it dropped. Yeah.
Okay.
Yeah.
And now it's going way back up, but it can only go up as much as there is inventory to supply the demand.
Right. And I think that the hesitancy in the market today is on the sell side. And that's kind of where we are. So we have, as I mentioned, pivoted to what I'll call high frequency data. So we are looking at the MLS data for the state of California on a daily basis and calculating a couple of averages. So this is a look at what's happened to average daily closed sales in the major regions of California and for the state as a whole. And you can see they can be a little noisy, right? These are like week to week changes. But in a market like we have today, set in the economy that we have today, we don't have the luxury of waiting till the middle of August to know what happened in July, right? We need to kind of track things. And what you can see, and I'll just focus here on the set of bars that describe the state as a whole, that when we were in the first week of March, we were looking at 631 average daily closed sales in the state. And the week ending the first week in August, we are looking at 774 average daily closed sales, which is down pretty sharply from the week before. And I'm going to move ahead here to show you the drop in closed sales was almost 26% on a week-to-week basis. So that's something we're watching very carefully in terms of its relationship to the resurgence of cases and the tighter lockdown regulations that can vary from county to county, right? Sure. And there's no one situation. So we came back. This market is ready to go. It's being fueled by low rates and a change in how people want to live, and yet it's really the virus that is setting, and it's the virus and the reaction to it by the government that's determining I think, the path of the overall recovery.
Mm-hmm.
So you asked me before about price points, if you will.
Yeah.
And I made the point that the low end of the market is constrained by really tight supply, and the high end of the market in June was up almost 7% on a year-over-year basis.
Wow.
Properties under 300,000 were constrained, dropped on a year-over-year basis by 21.5%.
Mm-hmm. Yeah, amazing. It's just maybe it's a good time to ask you, kind of our previous conversation off air, just about the general vibe with California. I mean, people have been leaving the state for many years. I left the state. You left the state. I mean, what does the future look like for California? Just as a kind of a general comment,
Yeah, I think in general, the country's rebalancing towards the middle and the south.
Mm-hmm.
And we've been tracking net domestic migration that you get through the Census Bureau, the American Community Survey for many years. And there's kind of a myth out there that it's our tax structure.
Mm-hmm.
And the reality is we're not losing millionaires. There's actually a small net gain in terms of people that are making higher incomes into California. But the story has been that we are losing young people and we are losing the working middle class,
right.
Working class, because they can't afford housing in California, be it ownership housing or even rental housing. And I think now overlaid on top of this is going to be, and it obviously it's too early to see in any data. Certainly we have anecdotal stories, but I think you're seeing an acceleration of this change fueled by the work from anywhere environment for white collar workers.
Yeah, no question about it. And, if you're a billionaire or a decamillionaire or a centimillionaire, it doesn't matter. You're just going to live where you want to live.
You can afford to live here. They're not the people that are hurting.
Right. But
they may not be happy. I know they're not happy about their taxes, but
sure.
I just look at the data.
Right. And they have all sorts of teams of accountants and lawyers to get them out of the taxes because they can do all sorts of special, sophisticated things to try and cope with the tax burden. But if someone's you said millionaire, and I think we got to revise our saying on that, because a millionaire ain't what it used to be. Adjusted for inflation, it's really no big deal to be a millionaire anymore.
Let me tell you, there's a lot of people who just lost their $600 unemployment supplement today that would see that as quite a big amount of money. I mean, I know what you mean, but
I agree with you
about it.
But I'm just saying that those people at the lower end of the socioeconomic ladder, they don't have a very high tax burden, even in California. Yes, the cost of living is high, but the taxes are not that high. Where it hits people is those people making $1 million a year. That's the ones that really just get creamed tax-wise. Well,
I'm just saying that there's a net inflow in that category. So
in the higher end. And so is that an inflow, Leslie, or is it people that have risen to that level of economic achievement? I'm wondering.
We can't tell. We essentially just know the income of the people coming and going. So in terms of what their journey to that income level, we have no idea.
Yeah. Okay. Good. Go ahead.
Yeah. So that, this is just a chart that looks at the various price segments, and it's the 2 million or more price category that actually had the increase in June and added to that price number. Here's a look at the kind of distribution of home sales by region, and you might be surprised to know that the San Francisco Bay Area is only 19% of the total state, even though they're huge disproportionate share of the economic activity compared to the home sales and population numbers. Southern California is about 45%, Central Valley 23%, and all of the major metropolitan areas had a drop on a year-over-year basis from June of 2020. The other counties categories are very rural and are benefiting again from what you talked about earlier, a flight to less density and more open space.